When most people hear the word scalping, the first thing that comes to mind is fast and stressful trading. And that's true. Scalping on a 1-minute time frame means you have to make a decision in a matter of seconds, enter a trade, set a stop loss, and even exit in less than a minute. This trading style is not for everyone, but if you love the excitement of the market and can work at high speed, it is one of the most profitable methods. Now the main question is, how can you get reliable signals in such a short time frame and be less involved in speculation? This is where the combination of indicators becomes important. Many people scalp with just one tool, such as EMA or MACD, but the result is not always accurate because the market is full of noise and any indicator can be deceptive on its own. Before we get into the rules of trading, we need to understand the tools in detail. EMA, or exponential moving average. One of the most important tools for understanding direction. We usually put two EMAs on the chart, one faster, for example EMA 8, and one slower, for example EMA 34. When the faster EMA crosses the slower EMA upwards, it usually signals the start of an uptrend. The opposite is true for a downtrend. These intersections act as a green light in scalping. Of course, we need to get confirmation. MACD. Many people use it with the default settings of 12-26-9, but for scalping it is better to make it faster. For example, the setting of 3-10-16, which some professional traders like Linda Raschke introduced, makes it react much faster to a change in price direction. This way, you enter the market before many and take your profit a few ticks earlier. Fibonacci. A very important tool for finding retracement levels. When an up or down wave ends, the market usually pulls back. With Fibonacci, we look for the 38.2%, 50%, and 61.8% levels. If these points overlap with the EMA and MACD signals, the probability of a successful trade is much higher. So remember, the EMA gives you the direction, the MACD confirms the strength of the move, and the Fibonacci determines the exact entry or exit point. Together, these three become a powerful filter for finding the best trades. Once we know the tools, now we need to know what the best settings are for 1-minute scalping. Because if you leave the same default settings, it usually either signals too late or is full of noise. EMAs. For this strategy, we usually use two EMAs. The first is the EMA 8, which moves very quickly and reacts to almost any price change. The second is the EMA 34, which is slower and acts as the main trend line. The intersection of these two tells you whether there is enough strength to change the trend or not. For example, when the EMA 8 crosses the EMA 34 from below, it is a possible sign of the start of an uptrend. MACD. If you use the default settings of 12-26-9, it will be very slow on the 1-minute time frame. That is why professional traders recommend using faster settings such as 3-10-16 or even 5-13-9. This will make the intersections appear sooner and you will have the opportunity to enter or exit faster. It is important to test with a demo which settings work best for your style. Fibonacci. When the market has a clear wave, for example, moving from a bottom to a top, you draw the Fibo from the bottom to the top. Now the 38.2, 50, and 61.8% retracement levels are the most important entry areas. When the price reaches these points and the EMAs and MACD confirm at the same time, then you have a golden setup. Time frame and currency pairs. For this strategy, a 1-minute time frame is suitable, but I recommend working only on currency pairs with low spreads, such as EUR/USD or GBP/USD. Because in scalping, even half a pip is very important. With these settings, you will see less noise and your entries and exits will be more regular and reliable. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Now we come to the most interesting part, the entry rules. Remember that scalping on the 1-minute time frame happens so quickly that if you don't have a clear framework, it's easy to make mistakes. So let these rules be your guiding lights. Rule 1. EMA crossover. When EMA 8 crosses EMA 34 from below, it's a bullish signal. Conversely, if EMA 8 crosses EMA 34 from above, it's a bearish signal. But remember, this is just the first condition. You need to get confirmation. Rule 2. MACD confirmation. After the EMA crossover occurs, it's MACD's turn. In a buy signal, the MACD histogram should cross 0, or the MACD line should be above the signal line. In a sell signal, the opposite is true. This shows that the market momentum is in the direction of your entry. Rule 3. Fibonacci levels. The best entry point is usually where the price has returned to the 38.2% or 61.8% Fibonacci level after a move. Because these levels have the highest probability of a reversal. When this happens at the same time as the EMA intersection and MACD confirmation, you have a golden opportunity. Rule 4. RSI check, optional. Some people also use RSI for final confirmation. For example, when the RSI is above 50, the buy signal is stronger, and when it is below 50, the sell signal is more reliable. Practical example, suppose EUR/USD was in a fast uptrend, then it returned to the 50% FIBO level. At this moment, the EMA 8 crosses the EMA 34 upwards, and the MACD histogram also shows a positive histogram. Here it makes sense to enter the buy, and you can take a short target of 5 to 10 pips. By observing these 3 layers of confirmation, your trading risk will be much lower and you will get a higher percentage of winnings. Many traders think that making a profit depends only on a precise entry. But the truth is that a precise exit is even more important than an entry. Because in scalping, every second and every pip is valuable. Take profit. For scalping on a 1-minute time frame, the target is usually not too big. It is best to set a target between 5 and 10 pips. Because if you wait longer, small market fluctuations can reverse your profit. Of course, if you have a strong overlap between the EMA, MACD, and Fibonacci levels, you can increase your target to 15 pips. Stop loss. One of the biggest mistakes in scalping is that traders do not set a loss limit. In this strategy, it is better to set the stop a little below the 61.8% Fibonacci level for buying, or above it for selling. This way, even if the market moves in the opposite direction, your losses will be controlled. Exit with a reversal signal. Sometimes the market will reverse before reaching the target. One of the best ways is to exit the trade quickly. If the EMA 8 crosses the EMA 34 again in the opposite direction of the trade, or the MACD changes phase, even if the target is not completely filled. Money management. The golden rule is not to risk more than 1 to 2% of your total capital on each trade. Because in scalping, the trading volume is high, and without this rule, your account will be destroyed very quickly. In short, a good entry is only half the battle. The right exit and risk management are what will make your scalping account grow in the long run. So, let's conclude. If this strategy was useful for you, be sure to write in the comments section on which currency pairs you tested it and what the results were. Don't forget to like the video to support the channel and hit the subscribe button so you don't miss the next tutorials.